Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, August 6th, and we'll see how things look for Thursday, August 7th. Going over what happened on Wednesday, the S&P 500 closed the day up 0.73%, reclaiming the 20-period simple moving average. The S&P was able to climb above the daily pivot at 63.12 and close near the R1 resistance level at 63.34. However, the rally stalled at the psychological 63.50 mark, with prices drifting for much of the rest of the session. Volume was above average, but a lack of strong conviction was evident as the S&P 500 failed to break higher, even in spite of what was taken as positive news. Mega-cap stocks, particularly Apple, Amazon, and Tesla, led the charge higher, but the broader market participation was lackluster. Mid and small caps underperformed, and defensive sectors including healthcare, energy, and real estate lagged. Discretionary and tech, on the other hand, showed relative strength, helped by standout performances from key players. Apple made headlines with a $100 billion investment in domestic manufacturing, in addition to the $500 billion already announced, signaling confidence in the U.S. economy and infrastructure, particularly in AI. Trade developments were mixed. India, a major manufacturer of Apple's iPhones, now faces a 50% tariff after an additional 25% hike, but Apple's iPhones are reportedly unaffected, which supported its stock price. Elsewhere, the Swiss president's visit to Washington failed to reduce the looming 39% tariff, but this had minimal market impact. A reportedly highly productive meeting between President Trump's Middle East envoy and Putin was noted, though no details were shared, leaving the markets unmoved yet again. On the economic front, the weekly mortgage applications index rose 3.1%. From a technical perspective, the S&P 500 is back to positive across all time frames. However, warning signs do persist. Intermediate-term indicators, including the PMO, are declining. The advanced decline line showed no significant improvement despite being an up day. High beta stocks underperformed low beta stocks, and semiconductors lagged the broader tech sector, raising concerns about market breadth. The VIX still remains below 20, but is showing seasonal tendencies to rise in August and September. Fear gauges, including the put-call ratio, did tick higher, suggesting cautious sentiment. Negative divergences and indicators, including the TTM squeeze and bullish percent index, further highlight possible underlying weakness, even as prices moved higher. Switching over to sector performance, discretionary and tech led the way, with Amazon up 4% and Tesla up 3.62%. The financials gained over 0.5% but continued to underperform the S&P, forming a concerning death cross in the financials to S&P ratio. Turning to the big picture, interest rates rose slightly but stayed below the critical 4.5% threshold, with the 10-year Treasury yield now at 4.22%. The dollar, which is in a downtrend, continued to weaken, which may be providing a tailwind for equities. Corporate earnings continue to support higher stock prices, with S&P 500 earnings growth rising from 8.7% in the first quarter of 2025 to 9.9% in the second quarter. Consumer confidence is continuing to align with trailing valuations, and capital investments continue to signal economic optimism. However, seasonality is a concern. August in post-election years has historically been negative. If this trend is widely anticipated, though, we could see a contrarian move higher. Looking ahead to Thursday, August 7th, key economic releases include initial as well as continuing jobless claims, productivity, and unit labor costs. Wholesale inventories will also be released, as well as consumer credit. Any new trade or tariff announcements will be critical, as they've been a market driver. Technically, watch the S&P 500's longer-term resistance at the 64.68 level, or if there is a decline, there should be support around 6,300. The market's bias is positive but fragile. One or two strong days could clear the internal weaknesses, but a couple of down days could tip sentiment negative. In conclusion, the S&P 500 is continuing to ride a positive wave, but cracks are forming beneath the surface. Weakening trends, lackluster breadth, and negative divergences do suggest caution. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.